According to South Africa's property sector charter, the country's sector is worth 4.9 trillion rand, and residential property makes up two-thirds of that property owned at an estimated 3 trillion rand, while commercial property carries a value of 520 billion rand. Publicly owned property stands at a total of 570 billion. Well, joining us for more is Francois Veruli, property economist and professor at the University of Cape Town. Francois, let's start by talking about the property sector. It's certainly had a good run. Can such good times last?
David, I think we've had an excellent run in the property market. I think if you look at the performance over the last few years, it has certainly managed to beat many of the other asset classes. But I think what was interesting was that it was a sector that was largely driven by the decline in interest rates. So I suppose the big question that we need to ask ourselves right now is, where does the market go? And I think some statements are being made by some of the analysts and others that we really are at a point where we need to look at the fundamentals, the business of property. It's no longer this correlation with interest rates that is going to take us very far in the next year. So yes, the focus is on operating costs, it is on vacancies, filling space, and getting the right rentals. And so I think that is where the focus is changing at the moment.
Well, you say fundamentals. I suppose one fundamental is simply getting out and selling the property as opposed to letting the interest rates do your work. What would you say are those fundamentals? How would you sort of summarize them?
I think the major issue which this sector is presently working with is the rise in the operating costs. We've seen the rise. There used to be a few rules in the South African property market. 12% escalations on net rental, 15% on operating costs, 5-year lease, IRR 21%. I think all of those fundamental norms are being questioned in this market, and the one that is really coming to the fore at the moment are the operating costs, where we've seen these rise in electricity prices coming through, and I think that is where very much of the focus is lying. And I think it's doing interesting things for the market. For example, you have quite a number of investors who are undertaking the deep retrofitting of buildings. In other words, you take a building, you try to find at least a 30 to 40% improvement in efficiencies. So that's what I'm talking about. It's really the bricks and mortar stuff that is starting to play its role. You know, when you have a sector where your operating costs are getting to 30, 40% of your gross income, it becomes a very real problem in the industry. And so that's where it lies. I think some vacancies are high. I believe that there are some risks in the office market at the moment. Some supply is still entering the market at a time when vacancy rates are relatively high.
Okay, and within that property class, I recall at the IPD conference a few years ago asking why residential property was never mentioned. Now, isn't that becoming a new investment class, asset class, within the asset class of property investment? And how's it going to work? What are the vehicles going to be?
I think you're raising a very interesting point here. And I think it is amazing how, if a few years ago you had even thought of the idea of private storage as an asset class in the property market, people would have laughed at you. And nevertheless, what we're seeing is, I think in the next few years, we're going to see very focused funds. In South Africa, we generally have, I suppose you could call them general funds, where you have a bit of office, a bit of retail, a bit of the industrial sector. The focus funds have been to some degree in the retail. We've seen, of course, hospitality in the hotel industry. But I think what is going to be exciting is that this sector is starting to become large enough for us to start saying, and we know that we will probably see in the very near future a fund that will focus on private storage. We will also, I think there's some indications that we're not that far from seeing funds with a substantial exposure to the residential property market. So yes, so whilst the listed funds and the REITs now have been largely of a commercial nature, I still take a view that that environment is going to be changed. So very soon you will be able to say, hey, you know what, I'm interested in a fund that is in logistics or in hospitals or in, as they have in California, which is also attractive, in vineyards. We're not maybe quite there yet, but those are the specialities that we will see in those markets. And of course, the whole REIT structure, although I don't think that has a major impact on the industry, is also taking the sector in certain new directions.
That's the real estate investment trusts. Now, what about the link up between property and bonds? And presumably with what you've said is happening and going to happen, there'll be new interest from investors. How should they be thinking about this sector, which after all has given very good value up to now?
I think this is a sector that continues to show a strong performance as far as its rentals are concerned. We're still seeing earnings which are increases which are well above the inflation rate, 10%, 12%. And I think that it's the strength of those escalations that continue to make the sector attractive. Invariably, I think in this environment, the whole sector performed well, as you rightly mentioned at the start of the discussion. And I think you're going to have to pick the sectors a lot more carefully going forward. And the view I'm largely taking at the moment is that the industrial sector seems to be doing well. The logistics sector seems to be doing particularly well. And I think that the logistics sector is benefiting from the retail sector. It's also strange how we used to think of retail. Retail has become warehousing increasingly with the internet. So I think that sector is doing well. Slightly behind that, the retail and probably the office sector will be the one behind that. So yes, stock picking is going to become more critical than it maybe was a year or two ago.
Thanks to Francois Verhulli, who is property economist and professor at the University of Cape Town.